Welcome to Drill Down Earnings. Let's take a look at Salesforce with their quarterly results out from pretty impressive quarter, I thought, but the market doesn't like it. This is the business story behind one stock on the move, one of the 50 most important companies, I think, in all of technology. Salesforce certainly is that. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. And we look at Q1 numbers, a little bit better than estimated, $9.75 billion in revenues and $2.55 per share. But we want to dig into the business. Wall Street just looks at beats and misses and doesn't really understand what's going on here. So $9.8 billion in revenues, up 8% year over year. Pretty good. The subscription and support revenue up to $9.3 billion. Really strong. Again, about 8% growth on a year over year basis. But single digit sales growth from a company that used to do well into the double digits for a very long time. And we see them doing another big acquisition to try to sort of revive that top line number. Now, let's look a little bit deeper here. So operating margins, getting a little bit better for this company, 18%, much better than it has been in prior years, but really balanced offerings. Now, this used to be all about CRM, right? This is stock ticker CRM, but customer resource management software. But really a combination of data services, marketing and commerce software platforms in general, services, and yes, sales-related software, that core Salesforce offering. But the Informatica acquisition that they announced at the beginning of this week really shows a doubling down, an $8 billion investment in adding to their data capabilities, which are already 25% of revenues for this company. And they say it's going to, they want to meld it right with their AI native data management with the Salesforce Data Cloud. And they think it's going to drive long-term growth in AI without diluting any shares because they've got so much cash in hand. A good thing for this company. Now, the data cloud is really just growing fantastically. 22 trillion records, up 175% on a year-over-year basis, and over $1 billion in annual recurring revenue. So really impressive for this company. Growth in a place where they said they're going to grow, and they're doing it. Now, they've done a lot of this data software stuff through acquisitions, acquiring MuleSoft, acquiring Tableau, and now Informatica. But that growth has reaccelerated now, and now that those mergers have kind of been absorbed. Or just in this quarter, without Informatica, we saw 10% revenue growth on a year-over-year basis in their data segment. They also say that they've been able to incorporate Slack as a way for their customers to access their AI offerings. So they think that that's a primary user interface to get into Agentforce, which enables them to get real-time summaries, meeting notes, conversational AI, all through all of the Salesforce apps, but accessing them through Slack, a clever way that just led to some really gradual diversification of all of these different platforms of sales, service, platform, marketing, and data. Now, one of the interesting things that we watch with this company, a lot of software companies, look at the RPOs, right? The remaining performance obligations, the deals that they've signed where the revenues are not yet in-house, but they expect them to be recognized. And there's two aspects of that. There's the deals that they've signed, the volume, the dollar volume of those deals, but there's also how much of that is current, how much is that in 12 months, how much is stretched out over time. And what we've seen is that the customers are kind of stretching out these deals. So the non-current RPOs are a lot bigger and growing faster than the current RPOs. That is narrowed quite a bit in the last year, but nonetheless, it's something we keep an eye on. I would also say their days of sales outstanding, recognizing sales for revenues that they've got on their balance sheet, but they can't recognize yet. The 166 days, it's tended to be kind of right in line with what they've had over a long period of time, and that's a positive sign for this company. Or how did the stock when the numbers came out? Well, stock rallied initially, but ultimately was down 1% in after-hours trading has continued to sell off, as I mentioned, and now the stock's only performed up 2% in the last year. I think there's concern out there that Marc Benioff, now that the checkbook's open buying Informatica, he might spend a lot more when the shareholders want to hold on to those assets. I think the shareholders also want some growth, and Benioff certainly has proven himself right over and over and over again with this company. I mentioned Agentforce. They've had 4,000 paid customers in Agentforce now, with over $100 million in annual recurring revenues and over 8,000 deals. So they're really showing that their customers are spending on AI. And they say that the way that's Marc Benioff talked on the call, it's really about integration. It's not about sort of bolting something on, dropping off a box of AI. Imagine that. Listen to Marc Benioff.
We're not just dropping some box off and saying, okay, we sold an Agentforce. We're pulling, all of our clouds in. And I'm sure that you heard, like, for example, in the example, I think of Pepsi, they have 11 of our clouds. So, when we're pulling in Agentforce, all the other products are coming along with it. Now, obviously, Agentforce and Data Cloud are absolutely deeply unified and connected, but Agentforce and Data Cloud are deeply integrated and connected to every single one of our products. This is a huge transformation that we have created just in the last 2 years.
All right, what's it all mean? What's your big drill down earnings takeaway on Salesforce earnings? Well, here it is. Q1 earnings from Salesforce, your essential summary drill down earnings takeaway is that $9.8 billion is pretty good, 8% revenue growth, but a lot slower than what they used to show when it was double digits every single quarter. That's why they're buying Informatica, and the purchase of Informatica might be one of the reasons the stock is down. But Marc Benioff has done well with these acquisitions, and that's your drill down earnings bite. The data business, that is now a quarter of their business, was $1,544 million in the quarter. Growth is reaccelerated there. That's before the Informatica acquisition comes in. These are companies like MuleSoft and Tableau that Salesforce has acquired. They're now growing at double digits, better than the rest of the company. I think it speaks to the way that this company's been successful at folding in acquisitions. It's going to be good news for Salesforce in the future. I don't care what the stock market is doing right now. Thanks for checking out Drill Down Earnings. I'm Cory Johnson.